But the bigger question really is that change in the approach was really based on the fact that we'd had very low interest rates and very low inflation for a long period of time, and policy was always very close to the effective lower bound, so there wasn't any firepower for central banks, and so it was a way to keep inflation expectations anchored at 2% and not have them slide down. Now we have entered a different period. The pandemic really may have changed that in a sustained way. We don't know that yet, but that's the big question we'll be asking ourselves is the effective lower bound to be thought of in a different way now? And if it were, that would have ramifications for our framework. But we haven't begun the review yet. It'll begin at the end of this year and probably end late the next year.
Coming up in today's review, stocks finish higher as Powell continues his dovish tone, Nvidia continues to run higher, bullish tech bets, the highest in 3 years, gold continues to break out, and what you need to know about investing in uranium. Hey, what's up guys? Thanks for tuning in to the Click Capital Daily Market Review. And it looks like we got another repeat of yesterday, with once again semiconductors leading this market higher, with none other than Nvidia, of course, now trading into the 900s, well on its path to hitting $1,000 a share. And the rest of the Magnificent Seven had a good day as well, with the rest of the market quite checkered in breadth, no real standout sector, just a little bit of weakness in the financials. And the S&P 500 actually broke out to new all-time highs today, getting up to 5165, finishing the day 1% higher. The Nasdaq as well, up 1.5%, and we are getting more broad participation in this rally. You can see that in the Russell 2000 breaking out to yearly highs as well. And so you may have noticed I added some of my custom indicators back onto the chart, as I've been working on updating them for the last few weeks. And so if you've already purchased my indicators, just restart your trading view and they will refresh. And for you guys that watch the review daily, I'll just give you a quick run through of what all these indicators are so you understand what you're looking at. First up the top here, we've got the seasonality forecast, which by default gives you a forecast 10 days ahead, looking back at 10 years of historical data to let you know what any asset has historically done in the coming 10 days. Next, with these big red and green bands, they're the buy-sell bands, which was my improvement on Bollinger Bands, as they don't really squeeze up like Bollinger Bands. Next, the yellow line here with this white box is the VWAP extremes. So by default, I have it on a 50-day VWAP, and then this current number shows you how much the price is above or below the current 50-day VWAP, and these 5 numbers are the historical extremes over the last year. These buy and sell signals on the candles is my momentum scalper indicator. And that just shows you when there's strong bursts of momentum and volume in a certain direction. It's primarily designed for day traders to use on the 1 minute chart. However, it can also be used on the daily chart to show you when the market's pushing hard in one direction. Next, these green and red arrows you see on the chart, that's the reversal signals that can show you where price may be exhausted. Next down here, we've got the dynamic swing index, which is my improvement on the RSI as the overbought and oversold levels dynamically adjust for each asset. Next, we've got the range strength. When that's red, that means the market's trending. You don't really want to take mean reversion oscillator signals when the market's trending. When it's green, that means the market is ranging. And finally, we've got the institutional buying percentage indicator, which gives an estimate of what big money is doing. Green means buying, orange means neutral, and red means selling. So just to give you an example here on Nvidia, it's obviously in a strong momentum run. We can see that in the range strength. It's gone really red. So you wouldn't look to fade that move using the DSI or the reversal signals. Instead, you want to look more to these momentum signals here in the buy boxes. However, on a stock like Apple, which has pretty much lost momentum, we can see with the range strength pretty low, previously green. The DSI is oversold here. We're getting some reversal signals, and it's coming down to the support zone where it's previously found support back here in late October. So pretty much all markets on all different time frames go from ranging to trending, and depending what sort of mode it's in, that's what sort of indicators you should use. And just keep in mind that they are indicators. You shouldn't rely on one solely, but rather as part of an overall trading strategy to help you pinpoint some entry and exit opportunities. And if you're interested in learning more about my custom indicators for TradingView, then just head on over to my website, clickcapital.io, navigate towards the indicators page, and then you can scroll down and learn about them all and get access to them if you're interested. Okay, just moving on with the daily review, we've got the most influential man in financial markets pouring more fuel on this fire. That's Fed Chair Powell coming out again, reiterating he wants to cut rates, and is kind of changing his language to saying we don't really need to see 2% inflation anymore. We kind of can be flexible because things have kind of changed after the pandemic, and just talking about how it's the pandemic, not the fact that the Fed kept rates at rock bottom lows for over a decade and artificially pumped $9 trillion into markets. All of that didn't cause inflation, but rather it was COVID, Russia, other things like that. And so the way you could read that is that pretty much regardless, he's going to start cutting rates by June, potentially even in May, which the market's given about a 24% chance that they may do. If we get some better than expected inflation prints, he may just go ahead and do that. Otherwise, it's looking like about 75% chance he's going to cut in June. However, unless we get some really hot CPI prints, it's almost guaranteed he's going to want to get 2 cuts in before the November election, which should really help support the market until then. We may get a 5-10% pullback in the meantime. However, that dip will be bought as all levels of government want to see the stock market and economy holding up really well going into November. Then after that, it doesn't really matter, especially if Trump got back in. So it's no surprise with the dovish Powell, we've got the dollar and bond yields falling. We can see that in the 2-year, coming down again today to 450, along with the dollar index, losing its 50-day VWAP on a momentum thrust down as well. However, the dollar is still range-bound and the trend is sideways. However, that's still supportive of stocks with a weaker dollar, especially for the S&P and NASDAQ indices, which are made up of companies that sell a lot overseas. So a weaker dollar translates into higher earnings for those companies exporting. And so this market's got everything going for it. That's why there's no fear in the stock market. Can see that in the VIX staying really subdued for months now. Apart from that brief spike up on the 13th last month, it's pretty much traded below 15 for over 4 months now. And so it shouldn't also come as a surprise that bullish tech bets are at the highest in 3 years and getting more and more one-sided. Can see that again in the options market today. Nvidia just absolutely off the charts here. 4.63 billion in notional call option values. That's more than 4 times the S&P 500. And same with others like Supermicro Computer and MicroStrategy. And the market as a whole still doing a lot of trading. 42.8 million contracts traded today. And there's the lopsided for you, 59% of them calls. And this is something that's been persisting for a few months now. And it's even got people like the ex-SEC chairman saying one-day options trading is gambling. However, this stock market's been a casino for quite some time, even before one-day DTEs really come into play. But there's some skepticism building with Nvidia. Some people saying this rally is getting unhealthy now, with even the greatest fund marketer of all time, Cathie Wood. She's actually worried about Nvidia. Maybe she should be more worried about why she dumped it in November 2022 and why she's missed out on one of the greatest bull runs in the most innovative sector this market has seen in years. But somehow she's still got 7.74 billion in assets under management and her flagship ETF, ARK Innovation, that's been going sideways for quite some time now, while the semiconductor industry continues to rip higher and higher, seemingly showing no signs of stopping. And with all this action, including Bitcoin ripping up to new all-time highs, when Powell cuts rates, it could cause everything to actually go exponential, and we go into the mother of all bubbles and blow-off tops. As I'd say, his biggest concern is appeasing the Biden administration, getting them re-elected, him keeping his job, and more importantly, offering the US Treasury a golden opportunity to refinance its huge amount of debt and keep the party going for many more years until they're well out of office. And like JP Morgan said, if he starts cutting rates in this current environment, that's just going to lay ground for another leg up in inflation. However, for as much as he talks about inflation, he may actually be happy in a 3 to 4% inflation world, because that not only allows the Treasury to refinance with lower rates, but it also allows the US government to inflate its debt away, much to the dismay of the largest bondholders in the world coming out of Japan and China. And that's why they're pursuing de-dollarization, especially China, looking to get more of its reserves into the precious shiny metal, gold, helping to sustain this rally as they continue to buy lots and lots of it every month, along with other central banks doing the same thing. We can see that in the daily price of gold futures, sustaining a strong rip here on the 7th consecutive daily green candle, currently sitting at all-time highs here. And if we can hold above this level, we may get a bit of momentum and could see a sustained rally, especially if the dollar stays at least sideways as well. This is at a time when a lot of things are ripping, including shipping rates. As we can see, there's a lot of momentum in this market. It's in a strong short and medium-term uptrend, popping up again there today. So look at crude holding ground just below $80 a barrel. Gold mining stocks continuing to bounce up. We also recently just heard from the SEC, which just voted on issuing a final rule about climate disclosures. US publicly listed companies must disclose to investors. And even though climate disclosures aren't mandatory under the current regime, companies make them voluntarily. They remain uncommon in all but a few sectors, but the largest companies must start making some climate disclosures as early as fiscal 25 and about greenhouse gas emissions as soon as fiscal 26. Required disclosures include climate risks, that have had or are reasonably likely to have a material impact on a company, business strategy, operations, or financial condition. And so, like it or not, the world's moving more clean and green. They've now been mandated to do that. And one sector I think that is going to hugely benefit from that is uranium and nuclear energy. The price of the underlying uranium has already more than quadrupled since the start of 2020, and momentum is continuing to build in the sector after a decade-long underinvestment. Looking out in the future, the world simply doesn't have enough supply coming on to meet demand, as these mines and production lines take years to set up, and so that's a strong tailwind for us investors to lean against. And after the Fukushima accident 2011 in Japan, the world turned its back on nuclear for a while. However, countries are coming back. We're seeing more and more commitments coming out of Europe especially, and even the US has pledged to triple nuclear energy capacity globally from 2020 to 2050. And so I keep a watch list of a dozen uranium and nuclear related securities, stocks and ETFs that anybody can use to gain exposure to this industry. With the biggest uranium producer in the world coming out of Canada, that's Cameco Corporation, which is listed on the NYSE under ticker CCJ, and that's been in a nice uptrend for a while now. Then you've got smaller explorers like Denison Mines, Uranium Energy Corp, and there's some other ways to play it, like Uranium Royalty Corp, which collects royalty interests on uranium-related assets. A bit more of a diversified play on uranium and other clean energy is through Constellation Energy under ticker CEG. That's been on a tear lately. Got a market cap of $56 billion. They're headquartered in Baltimore. And then looking in Australia, which along with Canada and Kazakhstan has some of the largest uranium deposits in the world. Popular one there is Paladin Energy and Deep Yellow. Looking at ETFs, you've got the Sprott Physical Uranium Trust over on Canada's TSX. That's pretty much the only way to get direct exposure to the underlying commodity itself, as uranium isn't traded on a futures exchange like other commodities are. It's negotiated privately between producers and buyers, and so they actually hold the uranium itself. Then you can get exposure to uranium miners through ETFs coming out of the same company again, Sprott Uranium Miners, and they've got a junior miners as well. After the Physical Uranium Trust, the second most popular ETF is URA. That gives you exposure to 49 uranium related companies. Now, if it's a little concentrated with the top two stocks, almost 50% of the fund, that's why I prefer the Uranium Nuclear Energy ETF under ticker NLR, and that still offers a healthy dividend yield of 4.33%, exposure to 26 related companies. And there's a look at the weekly chart. After ranging for a few years, it's broken out. It's got some momentum here. Still looking good. It's one of my top picks for last year, which did really well. And again, it's one of my top 10 picks for this year when it comes to ETFs. Moving on to economic data today. Still got the US importing about $70 billion worth goods more than it exports a month. Initial jobless claims pretty much coming in as expected. And the big one tomorrow, first Friday of the month, jobs report. Non-farm payrolls expected to come in at 200,000, with the unemployment rate expected to come in at 3.7%. And looking at volatility markets, we're not expecting any major surprises there. Stock market staying technically overbought in the extreme greed zone, and it looks like that print we got yesterday on corporate insiders selling was real, and still pretty high for Wednesday as well. 337 sales versus 65 purchases. Corporate insiders are offloading into this market. And there's a look at the VIX 1-day and VIX 9-day. Really not that much higher than the VIX 30-day options market, saying we shouldn't really get any big surprises tomorrow. Should just be another quiet Friday. And there's bond prices just drifting sideways, now in a ranging mode. TLT just holding ground above its 50-day VWAP. Same with high yield bonds, seeming to consolidate here and holding up pretty good. There's a look at Bitcoin, just consolidating below all-time highs with a slight pullback in Chinese securities today. Clean energy looking to hold this support box, and another good day for international stock indices. Canada's TSX breaking out, UK FTSE climbing higher, German DAX still walking the line, quite a bit of momentum in this market, and the hottest international stock market, Japan's Nikkei 225, still on a well-defined uptrend, and risk is well and alive in this market. We can see that in the spread in high beta stocks versus low volatility, still holding ground there. Semis was the winning sector today, followed by AI bots and junior gold miners having a nice push higher. There's the cannabis ETF coming back down, looking to find support around 750 here. On the legalization front, things still seem to be moving in the right direction. Market just seems to be taking a bit of a breather here. There's Apple with some oversold signals. We'll see whether it can hold 167, but the market really doesn't seem to mind a weak Apple. Meta ripping up to new all-time highs. Strong momentum in this name. Alphabet looking to bounce, and Tesla looking to hold ground just below 180. Looking at the other hot stocks in the market, ARM still holding up there, along with Supermicro Computer, hovering near all-time highs. Taiwan Semi busting out to new all-time highs on strong momentum. New York Community Bancorp still holding in there after they got a lifeline yesterday. And the other big banks still trading really well. And just look at that momentum in JP Morgan. What a parabolic rip it's been on since late October, which has barely done a 5% correction in that time. So as we can see, things are obviously still on a roll. And with Jay Powell getting even more dovish, that's what really kicked off this rally in late October, which he'd been hawkish up until then. And he came out and said, no, we can actually cut rates now. And he's just further reinforced that. And now even talking about messing with the inflation target, which is pretty much just laying the grounds. He's just going to cut rates anyway and take on that risk of reigniting inflation, which may not happen till 3-6 months later after he cuts rates. And once again, just keep kicking the can down the road, let someone else have to deal with the inflation, just like the huge amount of outstanding federal debt. That's all for today. Thanks very much for tuning into the review, and make sure you come back to the Click Capital channel tomorrow night. We'll dive into the jobs report and see if we get any good price action coming out of it. I'll see you then, guys. Cheers.